Alrighty. Hello, 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 everyone. Had some technical issues, a bit of lag this morning. Nice to see you, James Filios. Nice to see you all here today. Man, yesterday's stream was amazing. It really riled up a lot of people in the Discord. It got people thinking. And I got a few more resources to follow up on some of the topics that I mentioned yesterday. But right now, let's jump right on into the charts so then I can say, told you so. Zoom in a little bit. So, euro dollar moved lower. So the trade plan from yesterday was, what was it? I was buying that 110.7. And the whole idea for the risk management for this trade setup was like, oh, hey, there's a bump where you get your lows right here. Here's where you get your lows right here. So there was risk of coming lower. We identified this risk, and it was pretty straightforward to say, hey, this is kind of a dicey area to be trading right now. One system is saying, yeah, buy. And another system is saying there's some risk of going lower. And that's where I came in and I said, hey, you know what would be a good idea in a scenario here where you want to go long, but first off, not with a lot of size. You want to go long here, but you want to also mitigate your risk if you get stopped out. It was short. NZD USD. Now, I did get stopped on this one. And then once I got stopped out on it, I looked at today's range probabilities. And I was like, oh, hey, we're at a likely high. Also, we didn't get stopped out by, all that much. 3-part video difference between pro and retail traders. About to start. Yeah, man, it's going to be great. Yeah, so check this out. This is what got me back into the trade after I got the notification on my phone. I'm like, stop down. Oh, it must mean that we're in the new trading day. So I went and I checked up on the new trading day, and look at this. If you just hide this chart, see, there's your bump. This is where most of your tops for the day come in. And I'm like, we just hit the top for the day. I mean, I'll go short this again and put my stop here at 623. That's a reasonable stop. And then you have this whole area up here where, yeah, once you go past 623, you're talking 624, 625. At that point, 623 is a reasonable stop before getting in again here. So I got in again, and I can go ahead and do the drawings, whatnot. But I'd like to bring some attention to Aussie. And I'm going to bring up the daily range probabilities so you can see right here. There's one of these iterations, it'll load the setup. But you can see that the odds have this little tiny itsy bitsy peak. Yeah, you can start to see it a little more clearly now. Every single time there's a tick update on the chart, it automatically regenerates and simulates like 3,000 random samples of this distribution. So every time this indicator updates is based off whenever we get a tiny price movement. And it's just generating a whole new distribution for me. And yeah, there's your likely low for the day. This was a pretty good tell. I got my stop up here. Yeah, you can see it a little more clearly. Yeah, so I got a short, if I could. I think I actually closed my window while I was working on some of those technical issues. Got any buyers for the PWP yet? I think rules. Yeah, man. There's a lot of people who are trading it in the trading group. That's for sure. Oh yeah. Well, the primary thing is for forex. Most of the guys who are using these indicators are using them for FX, but you can use them on any asset because they're statistically based indicators. They're probability based indicators. So long you have enough data, you can use these indicators on whatever asset you want. Bonds, equities, crypto, commodities, FX, works on everything. Gonna take off my jacket. But yeah, everything so far so good. The risk from this euro dollar trade yesterday has been successfully managed. I was able to, take a tiny loss, get in short again, and now it's doing its job. And then also I was able to allocate some here. I think longer term Aussie dollar's got a bit of a problem ahead of it. Let me go ahead and illustrate. So I'm going to show you guys a little bit of trade research stuff. This is Westpac's The Red Book. It's a whole breakdown of the Australian economy. 20 pages. Look at that. Westpac produced by editor. Produced by all these guys. Going over all these macroeconomic indicators, telling you why they're important for Australia. I posted this in the Discord. FX Macro guy, he's been absolutely amazing every single week posting these outlooks. His commentary on Australia is bearish. Same thing for New Zealand. Bearish. And then came out with their outlook about a day ago. Central bank inflation fight to carry on. So BlackRock effectively here is saying, okay, Fed, they'll hike, ECB, they'll hike, BOJ will stay loose. And more or less whether or not we'll see future rate hikes is very, very, very dependent on inflation going forward. And then it's the exact same thing out of Nordea, except they're a little bit more verbose, giving you the different scenarios written up right there. And they're on the more hawkish side for ECB expectations. They're expecting a few more. This thing here is Canada, the BOC, Market Participant Survey second quarter of 2023. This is important to read because this is effectively the Bank of Canada, the Canadian Central Bank, going out and asking big banks and institutions, hey, what do you think's going to happen to these major macroeconomic indicators in the economy over the next year, quarter by quarter? And this is the survey response for monetary policy. So where do you think the Bank of Canada's policy interest rate's going to be? And if you look at this information, here's the median, the 50th percentile. That's the information we want. what we're going to look for is when these numbers change, whether they're going up or down. So this one says 5, 5, 5, 5. So for the rest of 2023, Bank of Canada is expected to stay flat. And then January flat, March it goes down, April it goes down, June it goes down. So down, 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 down. 25 basis points at probably each meeting starting from March onward is the median expectation for the Bank of Canada. So with this in mind, that all these central banks are about to hold rates potentially for the rest of the year, they'll probably do 1 or 2 hikes depending on the bank. But for example, like Canada and New Zealand, those banks are on hold effectively. Those banks are on hold. Australia, the RBNZ is New Zealand, and the RBA, which is Bank of Australia. Those banks, those 3 countries, Canada, Australia, New Zealand, the central banks are going to probably be on hold. So if you have the United States and Europe hiking, you got this relative game going on here where, if the United States is going to continue hiking, and if we've already hit the peak rate in a lot of these other countries, well, the future expectation we're probably going to have for their currency is going to be more bearish relative to the currencies with the countries that have the stronger central bank policy, like the United States and Europe. And there's even some argument that Europe may not actually be that strong, simply due to the fact that if they continue to hike into a weakening economy, the United States is the strongest economy in the world, we can withstand 1 or 2 more 25 basis point rate hikes. The Europeans, maybe, because they're already getting hit hard. Oh man, I see a lot of messages redacted. Oh, hello, kitty cat. Yeah, it's a good cat. Oh, as soon as I get into my streams, that cat's always like, oh, I would like some attention now. I would like some attention. I give that cat attention all day long. Very good cat. Alrighty. There's also a little bit of geopolitical news. So get this. There is a link between some of the outlooks that I saw. So you have Seb. China's Politburo still avoiding major stimulus, which is mostly due to the United States weakening the dollar over, say, the last month. Because the US dollar has been getting weaker, China hasn't had to do this stimulus. But check this out. When you read commentary around China, it's still pretty bearish. Like here, FX macro. Weak Chinese data is still weighing on the Australian dollar, right there. And I'm surprised that weak China isn't also mentioned here for New Zealand, because China's a big part of the New Zealand economy. Yeah. Yeah, again, CAD, Aussie, and New Zealand are their direction is most to be dollar dependent. So the strength or the weakness of the US dollar is going to be a larger determining factor maybe over the next 3 months for how these three currency rates move against the US dollar. Yeah. The link to this is in the geopolitics chat in the Discord. And again, feel free to post. Here, I'll show you where that is. And Discord. Yeah, so here are the announcements for the streams. Here are the trade plans. You can see my New Zealand dollar trade plan. I'll probably need to update and add. I mean, you can probably tell what assets we're doing in the trade group. So it's like, yeah. On the day-to-day, I'll post charts, and every once in a while, I'll go over the weekly outlooks. But right here, under geopolitics, you'll find a sub link to this outlook. And then I went over this whole thing about risks, and you want to make sure how when you lose money, right? So, you know, there's a lot of people who watch that, they got all riled up and they're like, oh, Joe, you know, you really got me motivated. How do I actually go about implementing some of the things that you're talking about and delve deeper into those ideas? Guys, I got like a whole bunch of channels of resources. I just got this in my inbox today, or actually a few days ago. Go to Discord and scroll down past indicators, and you'll see resources. And under resources, there's this risk management channel, and it's got all sorts of stuff on risk management.
In stage 1, we say nothing is going to happen.
Stage 2, we say something may be going to happen, but we should do nothing about it.
In stage 3, we say that maybe we should do something about it, but there's nothing we can do.
Stage 4, we say maybe there was something we could have done, but it's too late now.
Yeah, you don't want to be those guys. Look at all this stuff. Yeah, like, this is what I'm talking about. Like this, it's all this sort of stuff. You just scroll up and up and up and up and up. And I've been posting in this chat for so damn long. Look at that. This is an actual percentage breakdown of how much you lose. Right? For the Bulls, for the Bears, the cost of losses, volatility drag, all that kind of good stuff. There is so much in here. Man, I have posted a lot of stuff. Wow. Yeah, a lot of stuff on risk management here. I highly recommend reading this article if you're brand new. This article is particularly fantastic because of this chart here. It actually shows you, hey, instead of having this weird distribution where your losses can be tens of %, limit your losses to 0.5%, and then always get stopped out at 0.5% of whatever risk you put on. And yeah, sure, you know, you'll get stopped out quite a bit. You can see how many trades. Like, that's like 300 trades in this backtest. But then you see how there's this asymmetric skew. You see how, like, there's some trades out here all the way on the right-hand side of this curve. Like, okay, there's some 1%ers, some 3%ers, some freaking 10%ers. Guys, just hop on the Discord. And when you got a moment, go to the risk management channel, click on that, and read that article. And then when you got another moment, post some trade plans, right? For the ES, for crypto, for bonds, for commodities, do some macro analysis, whatever you want to do. I'm trying to promote you guys beginning the discussion, because it's not until you actually start writing it down and talking with other traders that you're gonna know relatively what you're talking about. Because look, don't get me wrong, if you're a relatively smart guy and you're staying generally well informed about markets, you should do pretty okay so long you have a multi-month, multi-quarter outlook and things are pretty nominal. But if you're trying to do professional discretionary trading, you kind of need to be in the weeds of, okay, here's how I'm actually managing my risk in and out. Here are my levels that I'm getting in and out. Here's the type of risks that I'm taking. Here's why I'm taking these risks and why they look attractive to me. And then someone else who's looking at the same trade can assist in your research, right? Going through all those outlooks and saying, hey, this outlook in this YouTube video at this timestamp and this commentary and whatever you can shore up, you can then post in a thread and conglomerate all the ideas to build up the trade plan, not by just yourself. But also, you can actually have people come in and say, hey, there's actually a risk when you look at it through this lens, or when you incorporate these future trading expectations, or this economic event coming up, or these statistics. They can then bring you to some form of awareness about, hey, maybe this trade is more risky than you originally interpreted based off the analysis that I'm sharing here. So all I'm doing is promoting that you guys post and share your thoughts and your trade plans and get used to sharing your trade plans. I mean, it's really not a big deal. It takes me 3-4 minutes to post like a single trade plan. You know, a lot of the reasons why I'm not posting absolutely every single trade plan here in this trade plans forum is because I'm posting a lot of my stuff in my trading group. You know, I'm posting a lot of like the week ahead stuff. As soon as I'm taking trades, I'm posting in the trade group. But every now and again, I'll post stuff here in the trade plans, but I'll participate with anything you guys post, and I'll give feedback using my indicators, and I'll be like, hey, you know, there's this thing going on with pivot probabilities for the week or for the month. These are pretty good odds based off interpreting this indicator. And then I can also, because I read every single outlook, I can come into the thread that you post and say, hey, you know, you've done some good analysis here on your risk management. Have you also considered, you know, this outlook and this outlook and this outlook and the things they agree and disagree on? And that just gets you thinking more along the lines of, okay, what are other traders thinking? And how did they come to that conclusion? What was their research method? And then shoring up all that information, all that knowledge over time, over and over and over again, to develop a very strong discretionary skill for interpreting trades. Yeah, 90% of accounts lose 90% of their money in 90 days. And 99% lose within 2 years, yeah. Look, it's just like most people are going to lose all their money. And there's so many people who just want to manipulate people who have like dollar signs for eyeballs. They have greed in their heart. And all they want to do is try and get to the point where they're trading kind of in this fashion that I'm demonstrating. I'm going through all my analysis. I'm going through all my charts. I'm saying, hey, you know, I'm using my stats and I'm taking my short trades here, and here's how I'm doing my hedging here, and here's this and here's that. Like, I can do this day in and day out on the stream, but it's not all that helpful if, oh man, that actually was a really good buy. Shit. Here I am talking to you guys and I'm missing out on trades. Crap. But yeah, no, there's good stuff here. There's good stuff here. Let's actually real quick. I want to actually look at the week. And unbiased. Yep, we went past that probability weighted pivot by just a bit. But that's all because we saw range probabilities had another bump in the distribution down right here for the week. See that? Big spike. Gee, I wonder if we make another slightly lower low. In all seriousness, I don't know if we will or not. This actually could be the low for the week. But one more thing I'm going to look at that's on a more macro scale here on a daily time frame. Yeah, that's negative momentum. But I want to look at the yield spreads. Ooh. Oh, man, those yield spreads are horrible. And let's see here, 669, and now we're at 696. Okay, so these yield spreads are getting worse. When these yield spreads get worse, it means it's bearish. I mean, you can just look at the color of these bars and just see, okay, here's a bunch of green, here's a bunch of red, here it goes to white, and then to green, up, and then red down, and then white's the transition, and then green up, up, up. And then here's a transition, and then red down, down, down. Yield spreads, which is what this indicator is a known leading indicator of FX prices for like the last 30, 40 years. There are a lot of people who pretty much exclusively use this as their indication for how to trade, because effectively what they're doing in this indicator is you're looking at how the bond markets are moving in one country relative to another. So you know how we're looking at euro dollar? That's an exchange rate. It's a pairing. So we're looking at euro versus the US dollar. Now, this indicator I'm talking about is yield spread. And in a lot of analyses, you'll see people will be like, oh, let me go ahead and add the 10-year US yield, right? Let me go ahead and add that as a new scale. And, oh yeah, you can see the inverse relationship, right? As the US yields go up, these FX prices go down, and then as US yields come down, euro prices go up, and you have this inverse relationship right now, and then the relationship, oh no, the relationship turned positive, right? You're getting positive price movements on positive yields. Some people like to use the 2-year. I can go ahead and pull that up. But even that, it's like, okay. I mean, in all seriousness, on a pair like USD JPY, the similarity is a lot closer. Like, you can clearly see, oh, up, 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 down, 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 up, 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 down, 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 up, 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 and then down. So, yeah, against a currency that has zero movement in its bonds and its bond yield, yeah, this will be your sole determining factor. But that analysis is, I think, very flawed, especially when you're trying to do that for currencies. When you're trying to determine if, when you're looking at USD JPY, what you really should be looking at when you're trying to look at bond stuff is, well, US02Y minus JP02Y. You take the spread, the difference between the two. You add those, and now you're like, oh, wow. Now there's something going on here. Now there's something going on here. So all I did was I combined that information into an indicator across every single yield spread, because instead of having like 30, what is it? No, it's more like 10 lines on your chart. Instead of having 10 lines on your chart to get that information and then analyze it line by line by line, I make things go flash green and red. Makes it super, super simple. Hey, the yield spreads are red right now on Eurodollar. It's probably not a good idea to go long. So looking at the yield spread from yesterday, right, how negative that was. This is the 110.7 that I went long yesterday. I was like, this is just another reason to do the hedge. So then you go to New Zealand dollar, and the short term, you see this is a more mixed picture. The long-term yield spreads, so the yield spread from right now compared to 25 days ago is bullish. The intermediate yield spread, that is what the yield spread is right now versus 7 days ago, it's kind of like a moving average thing, right? Long-term is a longer lag, intermediate is a bit of a shorter lag, and then short-term is like a really short lag. Short-term on this is comparing the yield spread today from 2 days ago. And you can see all of the short-term yield spreads are all negative. The intermediate yield spreads are roughly flat, they're mixed. And then the long-term yield spread, so from here to 25 days ago, 25 trading days ago, yeah, it's still net up. I'd say maybe there's some room, just looking off of yields exclusively, for New Zealand dollar to continue this positive drift over the last 2 months into maybe the first couple weeks of August. But instead of guessing, why don't we do something a bit smarter, right? Why don't we actually go and look at the seasonal forecast? So this is an actual candle seasonal forecast. And it looks pretty flat except for this trading day here, this 22nd trading day of July. And it turns out that trading day doesn't actually occur, because this month gets cut short to the 21st trading day. Yeah. So net, the expected value is pretty flat seasonally for what? Call it the next 10 or so days. So not a whole lot of information in the seasonal expected value. So I feel a little more comfortable saying, yeah, we'll probably get a neat little positive drift here. so long there's no negative surprises in the economic data that are coming out later this week. Looking at Aussie dollar, though, that's a bit of a different story. You can see it really does start to look a bit more bearish. Tomorrow, though, you do have some positive seasonal expected value. So tomorrow, 61, call it 62% of the time is a bullish trading day. And it has very positive. It's just flashing bright green at you, very bullish seasonal expected value. And the yield spreads are just negative, very, very bad. And they've been very, very bad since the 17th of July. So literally for the last week and a half, the yield spreads have been telling you to stay nothing but short. Okie doke. Looks like we're getting a little bit of a rebound here on the Aussie. Short-term yield spreads are improving, which is good to see if you're a dollar bear. Yield spreads short-term are still pretty bad on euro dollar. Is there anything new coming down the squawk chat here? Yeah, kind of a slow day today. Everyone's just kind of waiting until the end of the week rolls around. Well, if you guys want me to do any requests as far as chart analysis goes, go ahead and let me know. Yeah, tomorrow we have FOMC and Bank of Canada. That's right. What else we got? And then on the day after that, on the 27th, so in 2 days from now, we have ECB. Okay. Oh, no. So when it comes down to how the yield spreads work, it's quite simple. Green is bullish, red is bearish. And you'll find that in a lot of scenarios that when the yield spreads start to rotate from bearish to this white neutral, that's a flip. The bond market is now seeing yields in European bonds increase at a faster rate than US bonds. And that appreciates euro dollar. Because now buying euros becomes more expensive. Because you can get a better return if you convert your dollars into euros and put them into European bonds compared to a day or two ago. So this is all on a relative trading basis. And that's why this works, right? This isn't like, oh, it's some technical line. It's like, no, there are tens of billions of dollars that have to move this indicator to generate these signals. Pound dollar and euro Swissy. All right. So I got pound right here. So pound has pretty bad yield spreads. But man, you can just tell, like, just going along from here and on, it's just been, that's been fantastic. First time you're getting negative yield spreads in, I don't know, since the beginning of February. So it's been months, man. It's been months since you've had negative yield spreads here. How's the momentum on this? Is the momentum pretty? Yeah, the momentum's pretty bad still. Okie doke. Wow, you guys went far. Yeah. I wonder what the pivot probability said. Yep, only around 18% of the time your low comes in here, so this was not the nominal trade plan. The nominal trade plan was to come down below this S0.5 monthly pivot and buy off that. So this bullish continuation is just that. You'd probably have to trade that off of a weekly setup. Oh yeah, but there's some good information. Once you start going past this R1, you have to take into account potentially going up to here. Because getting your high just above R1 is just as likely as getting your high way up here. Oh my god. That is crazy. So, how about for the week ahead here? Wow. I would be surprised if we did not at least go to the weekly central pivot at 129.3. I would be surprised. However, considering that the yield spreads are negative, which means price movement is very favorable for the US dollar right now, I wouldn't be surprised to see more negative drift. However, now looking at this, the probability weighted pivot low is right here at 128, and we just tapped 128 and went off of it. So I don't know if we continue to hold here into Wednesday. Yeah, going into end of day Wednesday, I wouldn't be surprised to see the move up or down. Real quick, I wonder, what does range probabilities tell us? Not so insignificant likelihood that the low is in. Yeah, you could definitely, yeah, and going to the weekly central pivot is still definitely within nominal odds here. You can see how rich the color is in this whole area. Right, this whole area has a big highlight around it. So you're pretty likely, I'd say, to at least, you got good odds of hitting that weekly central. This is a matter of, were you able to kind of catch this 128 buy around here based off the combination of this probability weighted pivot low and these very strong probabilities here for buying off those lows? This is, if you do buy there, what kind of risk do you take, right? Probably putting the stop at S1 is not the worst thing in the world. Yeah, I'd say maybe just above S1, like 127.5 or 127.6, somewhere just above there. Just like, as you can see how there's a peak right here and where a lot of your lows show up. And then there's a secondary peak right here just below S1. So if you go, let's say, just past this price of like 127.7, right in this kind of divot between the two peaks, it's like, okay, having your stop right there, because you're probably going to go to the next most likely zone, which is this area right here around 127.3. So yeah, that probably makes it a little more clear. Yeah. You could probably even get a little more specific. Call it 127.65. Roughly around here, you put the stop and you buy around there. And you're targeting central pivot. I wonder what that setup looks like. Long. Yeah, that's actually a pretty good setup. But that's assuming you knew all this information ahead of time and you took this trade. Based off the information we have now, it'd be something like going long right here. And you can see that's a less enticing risk to reward. But it's still I'd say, a relatively decent risk to reward in all seriousness. It's just in this sort of scenario, maybe you're targeting more like, call it 129.5. And you're probably reducing the size of this trade because, getting the long right here makes the risk to reward very, very attractive compared to, just moving it that many, moving it 30 pips. It's like, okay, now I got to put my stop loss even further. And for the same amount of risk, I have less size on this trade. So now I'm going to be making less money. And that's just the reality of trading. It doesn't stop us from putting on the trades. If the trade's got a good setup, you stick with the good, proper risk management, right? Guys, just go back to the Discord, right? Go back to the Discord, go to the risk management resource channel, and read this article. It goes over exactly. It walks you through step by step all the things about risks that I was talking about yesterday in a very informal way. It just gets you set up with the basic concepts and ideas you need to start competently discussing and relating to professional traders who actually know what they're doing with this sort of stuff. It gives you like the basic common vocabulary and ideas you need to start interacting and, doing the work and whatnot. Okie doke. Let's see here. And then Euro Swissy. And I think we'll call it at Euro Swissy unless I get like a couple more responses or whatnot. A couple more questions. So Euro Swissy. Hey! Probability way to pivot low. Oh. Man. Looks like I finally fixed this bug. It's just a visual bug. Thank God. I think this is... Yep. That should help resolve it. Yep, there we go. That looks much, much better. Yeah, so the low is probably in for the week. A stop at S1 looks quite reasonable. Or, hell, even... It'd probably have to be a little further. In all seriousness, like this area right here. Yeah, this is roughly where your 90th probability is. Yeah, somewhere around here. What is it? 0.957? I think would be a reasonable stop. So something along these lines. And then what would be a decent target for this week? What would be a decent target for the week? Probably R0.5. That is if it continues going higher. Now let's look at the daily yield spread though. And the yield spreads are quite negative on the short term. Yeah, they've been quite positive up until recently. And you can see sometimes on these Swissies can have, there are pairs like this. This is a matter of, okay, I'm looking at the data. I can see sometimes it has negative correlations. And in that scenario, I think we have settings to adjust how that looks. Yeah. And you can see that immediately looks better. I just changed the measurement that controls how the bars are colored. And this is all a bunch of neutral, slightly positive, slightly negative, slightly positive, slightly negative. Yeah, nothing, no super huge movements outside of the last few months. Nothing in like the last 2 months has been super crazy. I am curious. Is this just an inverse correlation or? Yeah, on the Swissies have this thing with the yield spreads going on. You need, I've looked at a few models that incorporate yield spreads and central bank rates and futures pricing into these sort of things. And yeah, those models are crazy. Crazy good at trading FX. But they, even in those models, in the documentation for those models, have mentioned, hey, you know, sometimes on the Swissy pairs, you get this weird inverse correlation thing going on. And so you just have to exclude that from your universe. Oh, well, you know, not the end of the world. Some Swissies are fine. It's just a matter of, well, if the yields don't actually do much forecasting over the last several months, don't, you know, bet your life on the yields helping you out. Like Euro New Zealand, this looks a lot more reasonable. Green, all the way to the tippy top. Rotate, short, relief, short. And then you can see how much weaker that red bar got. Kept you on the short side until the low came in. Told you to start getting short around here. Told you to rotate, get long at the low. And now it's telling you to go short again. And every single yield spread across every single duration is short. So you can see how, okay, in some situations, frankly, most situations, for most currency pairs, it's the only charts that I found that those inverse correlation things happen on is the Swissy. But so long you know that, it's like there's really no, yeah, dude, look, it kept you short that whole time here on Euro Aussie. Oh man. And it's just starting to get short right now. So Aussie might be outperforming Euro here relatively soon. I want to check out oil real fast. Momentum on oil. Momentum on oil is still pretty darn good. I want to check out the range probability high on oil here for the week. There, real quick. Yeah, check that out. You got a extra bump up here above R2, another peak in the distribution. So, I'd say it's unlikely the top actually is coming in right now. Don't get me wrong, top certainly could be in, but I still see the risk of just reaching sub 80 this week. It's like going to like the $79.8 price range is in the cards for oil. Getting to this area just above the R2 weekly pivot is just in the cards. And are we at a likely low for gold? It does look like that. There might be another good gold setup here. Yeah. Yeah, I would say so. There's relatively decent gold setup here. Oh, yeah, the low's probably in for the week right now. Yeah. Man, that'd be a pretty first stop, though. You would have to have your stop in the 1940s. And then the ideal target would be these prior highs here, effectively taking prices back to the 1980s on gold. Yeah, something along these lines. That's what I'd be looking at for gold. Just above the R0.5 weekly. Okie doke. How about equities? The ES. Whoa. Okay. Let's hide that one for now. I would not be surprised if the top for the week on the stock market comes in literally right now. But as far as managing the risk on the trade, you'd have to have your stop somewhere around the 46.10. Effectively the prior swing high here. And then it'd be a pretty shallow target. It'd be like 45.5. It'd be like a 30-point move. So it's not the best risk to reward setup here. Oh wow, that is quite a skew though. Let's try a different time frame here. Yeah, now you can really see how negatively skewed this can get. But look at that, the consolidation is still there for where most of your tops show up. So that's the stop. I mean, if you do make a lower low this week, there's really no telling where your low is probably going to come in, except for maybe saying, again, like this 40, like the lower section between 4550 to 4500. I'll go ahead and I'll draw a box around it. This whole area could be in play this week. So stay nimble and behave, react quickly and stay up to date with some news. Well, I hope this was informative for you guys. This is definitely a much chiller stream than yesterday. I've been getting a hell of a lot of programming done. I'm getting ready to post some upgrades to these indicators. But I'm making a lot of technical headway first. A lot of technical headway. All right, I think now is the pretty good time to actually end the stream. I appreciate all you guys for watching. And by the way, there was a survey that I did in the last stream. And thank you guys for responding to that. I'll be posting the results to that in the Discord, in the general chat, in the Discord. Real quick, it's... You'll be able to see it right here in this general chat. Okie dokie, guys. I'll see you tomorrow for the next daily stream. And again, if you want to hit me up, if you want to join the trading group or whatever, hop into the Discord, chat up a storm, post some trade plans, join the trade group. And I'll see you guys tomorrow. And as we go into the end of this week, we're going to start to see some central bank decisions. And that means we'll probably get to see some market volatility come out as we get some updates to forward guidance. So thank you guys for watching. I've been your boss, Joe Boss. And I'll see you guys in a bit.